Welcome everyone to another edition of the Story Trading Weekly Meetup. Tonight we have Ashleigh Day, contributors Ashleigh and Polo Gonzalez, longtime contributors to our group, presenting a couple of stock picks. Before we do that, quick look at the disclaimer. Story Trading is not an investment advisor, and that includes our guest presenters, unless they say otherwise. Investing in securities involves significant risk of loss. This event is being recorded. It's going to be available to our paid subscribers throughout the week. And after the trading week is over, we'll make that available to outsiders on our YouTube channel. So what we do, Story Trading is an investor network. We aim to beat Wall Street insiders at their own game through crowdsourced collaboration of our four pillars of fundamentals, catalysts, sentiment, and technicals in order to understand the story behind the trade. And of course, you guys here tonight at the VIP program have access to these special Zoom events for an extra edge. So tonight we'll go, as usual, through a quick performance review of previous picks. We'll have Polo go first and then Ashleigh, and then we'll turn off the recording for our Trade of the Week. So as far as our VIP presentations go, you can hop over to our website anytime you want, StoryTrading.com. Just click on performance, and then you're going to see all of the presentations since inception. We moved a few. There are a couple changes here. Rob Muck closed out Real Networks at a 405% gain. I missed that Florian closed out Unity on February 8th, so we put that in there at an 83% gain. So that decreases our return here, still ahead of ARK. We're gonna merge these together, so it includes the close picks, but we're comparing ourselves with ARK and QQQ and everything here. So everyone's doing a great job. So Ashleigh, I'm very excited about this presentation because Aehr Test Systems has been in our community discussed for, gosh, probably coming up on 2 years. And we've had a research group on it, a pretty active one, but no one's stepped up to the plate to present it. And the stock hasn't broken out either. So maybe that's not a coincidence. And the fact that you're ready to present it now maybe marks an inflection point in the stock. So I'm really excited to hear what you have to say.
Well, let's hope so. And I'm excited to actually not be presenting it at or the price from a few weeks ago at 350. So it's a nice time to take a look at it. And if you wouldn't mind, I'd like to share my screen.
Sure. I think you could do that now.
There we go. Can everyone see that?
Yep.
Okay. So yeah, this, gosh, I've known this company since probably 2007, 2008, quite a long time, and have sort of checked them out off and on, and have just sort of not wanted to present it until sort of things were starting to align. Basically, a little background, they were definitely COVID impacted. They had a, coming into 2020, they had a lot of momentum going. They were talking to dozens of customers. A lot of it requires getting into the facilities, installing their equipment. And so not being able to get into like the Intels and other companies in this space, particularly to install a new process, kind of everyone during COVID times was just kind of doing what they are currently doing without sort of, some companies are pivoting, but not a lot of people are changing their manufacturing processes and things like that if they don't have to. So it really put the brakes on what was likely to be a breakout year for the company. But here we are, a few months potentially away from some of these COVID restrictions being in place. So I think it's a kind of a good time to talk about them. So what they do is they provide wafer level test and burn-in equipment. So basically, a lot of semiconductors are tested and to make sure that they work. And what Aehr's unique advantage is they do it at the wafer level. They do it very early on in the process versus a lot of times the die will get packaged into parts and then it'll get tested. And a lot of their competitors are very good at testing when the whole kind of package is together to make sure it all works. The key to their technology is really that it's done kind of right away at the wafer level, and they're able to kind of weed out the sort of the infant mortalities as soon as possible. You know, test and burn-in is done to make sure that the devices are going to work over a long period of time, so they basically age the devices. So they're in a few very key markets, and particularly right now for these markets. So silicon photonics, used for data centers, 5G infrastructure. It's a rapidly expanding market. Coming into 2020, they had 3 customers who were ready to move to volume production. And so that means they just ordered a couple of systems to get going and hadn't really bought a number of production systems to really ramp up. Silicon photonics is a cheaper and faster way to transfer data. Like, some of these transceivers might cost a few $1,000s before, and now we're in the few $100 realm. So it's a big cost savings, and so it's something they want to do. The reason the Aehr system is useful is in silicon photonics, the laser needs to be stabilized, like in a lot of laser applications. And so they can stabilize the laser and test it at the same time and burn it in at the same time. And so there's a big cost savings there. So one of the things they do, not only are they sort of volume test, but it's also a big cost savings. The next market, silicon carbide, another big market. So silicon carbide is found in electric vehicle onboard chargers and inverters, and in the charging stations where you plug in, and as well as solar system inverters. One of the differences between other semiconductors and materials is that these have a pretty high failure rate, something like 10%, I think. So they need to do full burn-in. They might get away with sort of sampling or testing a small number with other sort of semiconductors, but for silicon carbide, you really need to burn in all of them to make sure they work. And again, Aehr's advantage in wafer tests is they can kind of figure out which ones aren't going to work very early on. Like, for example, Tesla is one of their onsemi is their silicon carbide customer, and they supply to Tesla. They started using silicon carbide with the Model 3, so not that long ago. So they're fully in kind of ramping up mode right now. So basically, they'll put about maybe 6 die together on, if they weren't using Aehr system, they put sort of 6 dies together, get it the kind of the module set up, and then test it and see if it works. And if it fails, it costs them $40 or so for that part failure that they could have weeded out much earlier in the process. So I think as that market expands and they're looking for better margins, their rate of adoption of their equipment is going to grow. And that's kind of, you'll see in Aehr's most recent earnings report, they expect in carbide and in silicon photonics for the test to move to wafer level. It currently isn't. So that's why they haven't been selling a lot of systems, is because the market hasn't really thought it would work. And then they've proven over the last couple of years that it works. And it's just a case of gaining adoption. And so that's kind of the thing to play here, is how long is it going to take for the market to adopt their technology? But it's happening right now. So the big one, optical sensors, smartphones and wearables, watches and fitness bands. You'll see in a couple of their recent press releases, they had 2 recent orders from separate Apple subcontractors. That's their large multinational mobile device manufacturer. So Apple is starting to use more and more optical sensors on various devices. It's got their Apple Watch. It does a lot more in the health area than it used to. I would expect that the iPhone is going to do something similar. Apple actually recently got a patent for, I believe it was a 2 sensor blood glucose monitoring device, which would likely mean that they got to have one sensor on the watch and one on the phone. So they're clearly working with them. And then the nice thing about that order, well, I'll get into that later. But basically, that's obviously a growing market. There's a lot of companies that are adding optical sensors to their phones and wearables, particularly in the health-driven, but also 3D-driven. You look at AR glasses coming on the market as well. It's a growing area. And then memory is kind of the long shot. So there's a lot of, the first three are kind of some great ways for them to grow their business quite rapidly over the next few years. Memory would be somewhere which would just be a total home run. And Gain, the CEO, has kind of hinted the last couple of calls that, hey, they're always looking at that space. His background is in memory. He was an executive at Verigi before he joined. And ultimately, their end goal is to really get into memory, which would involve selling hundreds of systems. And I mean, if they landed one memory manufacturer, you'd be looking at the share price is $250 today. You'd probably be looking at 50 to 100 pretty easily. So the probability that that's going to happen is low, but it's just sort of like a nice to have huge upside in the event that they do get where they think they will go in the next, say, 3 to 5 years. So let's talk about the recent orders and kind of why I'm presenting them currently. Obviously, all those markets are red hot right now. So in November, they got a die pack, and so this was a small order, $1 million. Didn't move the market much, but it basically was Apple just saying, hey, we need some more of their consumables. And they also, and I spoke to the CEO maybe 6 weeks ago, and he sort of said that Apple had actually approached them, the supplier had approached them to solve a problem. And Aehr looked at it and said, yes, we can solve this problem for you. So it's kind of nice that such a massive company is going to Aehr, which clearly has a unique solution, and asking them to solve. They have a market cap of $60 million, $3 million of cash on the balance sheet. It's not exactly the type of company that would normally, you would normally think that a company that size would go to them. So they have a very unique solution, and I could talk a little bit about it. It's quite technical, but they're sort of their last three, I would say their last 5 press releases are worth going into in detail to figure out if you want to know what their moat is and what they can do versus their competitors. Then came in early December, and this one kind of did move the market because it was a bigger order. He got a $4 million order from a second Apple subcontractor. So technically a new customer, as they put it, but they basically are now working with 2 of Apple's suppliers for a high volume application. This is interesting because it was a fully, when they have systems and they have consumables. If anyone familiar with Zixi is kind of, you could see the more systems they sell in the beginning, a few years down the road, you kind of get this flywheel where they're going to be selling maybe more consumables at 50+% margin than systems. And they're currently about 50-50 on revenues between systems and consumables. This one's interesting because it's a fully decked out system, meaning it has all the capacity that you can get in one of their systems, some die packs, and some automatic loaders. Automatic loaders are usually for very high volume, so expect more orders to come after that. About, say, 3 months later, and right before the close of the quarter closed February 28th, they'll probably announce in early April. Expect the revenues to be, expect them to be about break even, so much better than last quarter. So that's obviously a good track for now. And then they project a better Q4. So we should look for profitability when they announce Q4. So the February order was for two customers, Silicon Carbide in the electric vehicle space and Silicon Photonics. They indicated that they believe they're going to win at least another Silicon Carbide customer. That's big because there's only 5 or 6 players in that space who are supplying the electric vehicle market. And that market obviously is pretty hot right now, particularly with investors, maybe more so than actual customers for electric vehicles. But the takeaway from that too was that they had multiple design wins and they needed more production capacity. So that also suggested more orders from different customers. March 1st, we had another only $1 million. So the nice thing about these 3 orders, they're wafer packs. They're only $1 million. So the headlines aren't that exciting. They didn't really move the stock, but they all basically say, hey, we're going to need more capacity, more systems, more wafer packs in the future. And the third one has to do with their silicon photonics. This was Intel ramping up, basically says their other lead customer, doing another multi-year ramp. They're going to be ordering systems for many years into the future. They tend to be on a every other year cycle. They didn't order many last year, so this could be a big year for Intel. To kind of in summary, you've got Apple picking up, Intel picking up, the other silicon photonics customer moving into production, which means more systems to ramp that. They have a third that was ready for production. They haven't announced anything on that, so they could be moving too. But all of these are basically suggesting there's more to come. About 23 million shares outstanding, a few options, a little bit of cash. They get 30% down payments on each order, so I'm not too worried about that. Their debt is only the PPP loan. They should get that forgiven. And then they have a line of credit if needed, which is untapped. They have pretty good leverage. About 65% of new orders, the cash drops to the bottom line. Break even of revenues is about 22 million. Current guidance is kind of the midpoint. That's the midpoint. But this year is backloaded, so 16 to 20 million to hit in the second half of the year, because the first half was lousy. It was basically COVID was still an issue and creating pent-up demand. They put in some temporary expense cuts. They did away with the non-executive ones. Executives are still on some pay decreases until they kind of get things going. So just quickly on sentiment and catalysts, they're in hot markets. We've seen kind of electric vehicles and charging and 5G and self-driving cars and LiDAR sensors. Pretty much everything they're playing in is sort of hot markets that kind of retail investors have sort of gravitated toward. And also semiconductor shortage. The stock popped to over $3 recently, likely because people think it's a semiconductor shortage play. They do help with volume production. So in theory, and in the auto space, so in theory, they could help drive more volume, but I don't know that that's necessarily is warranted, I guess. Catalysts are certainly, if they reopen, they're landing more customers. The CEO said he's been wanting to fly out to Germany to go meet there. I don't know who he's talking about. He might be STM, one of Apple's suppliers, but he basically hasn't been able to go to new customers. So they're talking with 24 others. They've got a handful they work with. There's a lot of runway there. And just every single press release mentioned that the customers were looking for new capacity. I'll quickly go through price action. So as I said, the stock sold off as expected after the last quarter earnings because they were lousy, but you see the orders, so you know they're lousy. Just like this next quarter is going to be break even and then fourth quarter profitable. We've seen some large big block buys, kind of not every week, but pretty consistently since the last earnings. And then I'll just say seems like a good opportunity right now because the PRs are very bullish, but the shares haven't really moved that much. So I like it here. And then the last piece is if you look back at the chart and wonder why the shares hit $5 all of a sudden in 2017, they said they were working with Apple, but as it turned out, it was only for sampling, which means they were just testing a small fraction of their actual production. Whereas the indication now is that Apple wants to use them for full production and full testing of 100% of their devices, which is the difference between a 5 million kind of order and a 50 million order. That's it.
Great, thank you, Ashleigh. Got a few questions here. I'm very interested in this company. I've spoken to Gain and investor relations before, like over a year ago. But quite frankly, I kind of gave up on understanding the technology. It's pretty complex. So, when I look at these press releases, to me, every press release from going back 2+ years ago, they have the word production in there somewhere. Production test run, test production run, for volume production. They throw those words in there, and like a outsider looking at it, I get fooled almost every time. I'm like, oh, it's a production order. They're going to the moon. So can you kind of just in a few words, what's the difference now with this, PR flow over the last few months compared to a year, 2 years ago? Fundamentally, what's happening, with the relationships and with their customers that you think this is now actually the inflection point of production runs?
I think what they're doing is they're getting these early consumables. So every time one of their customers has a new device, they need new wafer packs. That's the prime reason they call them consumables. That's the prime reason to order new consumables, is that they have a new device. And so what they're likely doing is getting the wafer packs they need for the new device, and kind of running them through the existing systems that they have. Or if they didn't have a system like that second Apple supplier, they ordered one, and then are running the wafer packs through that device, that system, and just kind of doing kind of like test runs to make sure that their manufacturing process is working and that they can basically ramp to full production. So I think what we're seeing is they're just sort of getting the parts and making sure that it's going to maybe doing a few kind of like dry runs or a few runs with whatever existing systems they have, making sure it works before they buy a bunch more. And sometimes they wait till the last minute to buy their systems as well.
Okay, so what kind of revenue are we talking about if Apple does go through doing it for? It wouldn't be for all of their products. You're thinking it's only like for the watch or something, or what products would they use it for?
Yeah, they have the health sensor in the watch, so that could be one of them. It's a little hard to gauge why there's two suppliers so far. It could be that they're doing it in the watch as well as the phone. So it's kind of going to be a big range. I know Gain threw that $50-60 million number out there on, maybe it's in the Q&A of the last conference call. He tends to be bullish, kind of overpromise, underdeliver, as anyone who's followed the company. So needs to be taken with a grain of salt. Obviously 50-60 million would be great, but something even half that is pretty nice too.
So how would that impact earnings? 50-60 million from Apple. You're talking about a revenue of 20 to 25 million. The company's break even. So if they get 50-60 million additional from Apple, what kind of EPS will they have?
Well, that's their entire market cap right there.
I know it looks.
Let's see. So at if they do 50 million in a year, say their kind of gross profit, well, their profit margins would probably exceed 50%, because we know that their increment, like when they're doing 25 million of revenues, their gross profit is probably 40 to 45. But if they said 65 drops to the bottom line, it means that every new system and consumable above that base level really accelerates their earnings. I think they get to 50 million of sales, they're doing maybe 50 cents EPS. Just looking at my model here, and possibly higher, because that I kind of keep their gross margins flat, even though I know that there's a lot of upside there.
Cool. Looks like there is a lot of upside there. So Rob, let me turn it over to you.
I'll ask a few of the questions from the chat first, from Vincent Abadi. Say Apple goes through, can Aehr Test Systems expand their capacity quickly?
They have, yes, they have enough capacity to provide the systems. They have a pretty large footprint. They're actually a few blocks away from Tesla and Fremont. They have a big factory. I mean, they used to serve memory back in the day, and they haven't moved. So they have the ability to scale up if needed. And I would assume that Apple wouldn't even consider them if they couldn't handle the job.
Makes sense. And then
Also, their consumables are outsourced, so that it also shouldn't be an issue for them.
And then if they can expand, will they need to raise funds to do so?
Well, with the number of deposits, or the amount of money they get on deposits, I wouldn't think so, unless we're talking about a massive expansion, which I think that would put us in the kind of the category of a bullish raise, which has been popular, the discussion this past couple weeks.
And then we have a question from Sanjay. The chip manufacturers need to manually load their wafers and dies onto wafer packs or die packs, and then insert them in and out of the Fox test systems for testing. How can this manual process cost effectively scale to testing millions of chips, wafers, even with an automatic loader?
I was going to say that they have an automatic, at least the Apple December order came with an automatic loader. And I assume that's for a very high volume application. Also, in that PR, one of the reasons they won that deal is because of how high volume their application is. I mean, they're testing and specifically the parallelism that's going on, because of the way they're kind of able to tweak their tests. They're able to do a lot more on one test than their competitors are.
Got it. And then I had a few questions. So I'm actually working in the microprocessor industry now. I still have a hard time figuring out exactly what this company. I understand like burn-in of PC boards, and then like testing to make sure they work properly. But do these existing manufacturers have their own burn-in and testing? And then Aehr Test Systems is like someone they could go to as like another option? Or do some of these manufacturers not do burn-in and testing, and then they turn to Aehr for their testing?
I'd say they just don't really do wafer level testing.
So they test at the final assembly level, but not at the wafer level.
Yeah, which is often a lot more expensive.
Got it. So testing at the wafer level. So when it comes to possibly more expensive wafers or more critical wafers for possibly medical applications or car applications, you could see like the value of this company increase.
And well, yeah, along those lines, particularly, so what's obviously driving to wafer levels, saving a lot of money, but also they're driving to 100% testing instead of sampling. Like an optical sensor for health purposes, blood monitoring, things like that, it has to work. It cannot fail. Same with testing for automotive. So you're kind of getting into more of these uses where the products simply can't fail. And so they have to do full testing, and that really plays to their advantage. they actually have, I believe the reason that Apple went with a sampling back in 2017, I think what they were going to use Aehr's product for was facial recognition, but the 3D sensing camera that does facial recognition is only on for a fraction of a second. And so they actually, over the course of the camera's life, that sensor may not be on for more than 1 second. And so they just don't fail. Whereas you got an optical sensor that's on 100% of the time, it's going to be used, for years potentially, and it has to be burned in and tested.
Got it. Makes sense. And then I would imagine there are some current PC boards for medical devices and other applications that need like 100% testing currently. It doesn't seem like Aehr is capturing that market yet, but they could in the future. Do you know why that is?
I would say too that the market didn't think that the wafer test would work until fairly recently. And also in 2020 is actually really when they pivoted, got in fresh blood into their sales team, kind of got rid of the sales folks that were selling their older ABTS products to Texas Instruments, which they've actually come out with a couple new ones to serve Texas Instruments. So those will be flowing in this coming up year as well. Kind of lower margin, but still good stuff. So they were basically kind of pivoting almost from an R&D sort of setup to sales setup last year. So some of that is yet to be seen.
Okay, good answer. And then a question from Vincent Abate again. Silicon carbide is the current tech used for manufacturing high power electronics. What is it? Gallium nitride will overtake silicon carbide due to its wide band gap properties. Any talk of gallium nitride being evaluated by Aehr?
Their product also works with gallium nitride. I did ask the CEO about that as well. I think because we had some chat on that in the StoryTrading discussions maybe 6 months ago. So they are working in that space as well.
Anyone have any other questions?
All right.
Okay, thank you, Ashleigh.
Thank you. Yeah, Ashleigh, thank you. It looks like, yep, great. So we do have an existing chat room. Stephen's thrown it in there for semiconductor stocks, including Aehr. So you can collaborate with Ashleigh in that room. Before we turn off the recording and go to the trade of the week, just want to let everyone know at StoryTrading.com, you can just go and click on events and see what's coming up. We have back to finally a happy hour. We've done a lot of special events on Wednesdays. So this Wednesday, we'll have a little happy hour. Maybe. I'm talking to a lot of CEOs and things like that. There's always a last minute chance they have a special guest on Wednesday. But for now, we have the happy hour on Wednesday. And you can see the rest of the schedule there. There's one change, March 29th. It's going to be a Monday instead of March 28th, instead of that Sunday night. So we'll let you know the topics on those weekly meetings soon. Also, remember to follow us on YouTube, on Twitter. Like and subscribe, please, at YouTube and at Twitter. We appreciate that. So thank you very much, everyone. We're going to stop the recording and go over to our trade of the week.